Hey, welcome to Zeitgeist. I'm Zuri, that's Alistair, and we've got a tale of two tech giants today.
One made billions from AI and crashed. The other promised superintelligence and soared. Let's get into it.
So Microsoft just reported earnings. They beat expectations. Revenue hit $81.3 billion, up 17%. Their cloud business crossed $50 billion for the first time ever. Oh, and they made a $7.6 billion gain from their OpenAI investment. Sounds great, right?
And then the stock dropped.
6 to 7% in after-hours trading. The next morning, some analysts saw drops approaching 10% at the worst points. It dragged down the entire Nasdaq. The semiconductor index had one of its roughest days in months.
Wait, how do you beat expectations and still crash?
Because Wall Street isn't looking at what happened. They're looking at what comes next. And what comes next is complicated. Let's start with Azure, which is Microsoft's cloud platform. It grew 38% this quarter. That hit analyst expectations, but investors were hoping for more. Some were looking for 39, 40, even higher. And when you're trading at these valuations, meeting expectations can feel like a disappointment.
So the growth is slowing?
That's the concern. But here's the bigger issue: the spending. Microsoft's capital expenditures hit $37.5 billion in just this quarter. That's up 66% year over year. In the first half of their fiscal year alone, they've spent $72.4 billion on infrastructure.
$72 billion in 6 months. Where is that money going?
About half of it is going to chips, GPUs and CPUs for AI data centers. The rest is land, buildings, infrastructure. Microsoft is racing to build out AI capacity because demand is so high they can't keep up. They admitted in the earnings call that capacity constraints will persist at least through June.
So they're spending like crazy because they literally can't meet demand. That sounds good?
It sounds good if you believe the returns will follow, but here's the math that spooked investors. Their capex is growing at 66%. Azure is growing at 38%. That gap is the problem. Morgan Stanley's Keith Weiss put it bluntly: capex is growing faster than we expected, and Azure is growing a little bit slower than we expected. That raises a big question. When does all this spending actually pay off?
Is Microsoft overspending on AI?
That's what some investors are worried about. Remember, this is happening right after the DeepSeek news shook the market. A Chinese startup claimed they built a competitive AI model for a fraction of what US companies are spending. If you can get 90% of the way there, with way less hardware, maybe Microsoft doesn't need to spend $80 billion a year on infrastructure.
But there's another side to this, right?
Absolutely. Microsoft's demand backlog doubled to $625 billion. That's contracted revenue that's going to flow in over time. The OpenAI partnership is clearly generating massive returns. That $7.6 billion gain speaks for itself. And Satya Nadella said they're only at the beginning phases of AI diffusion, and that Microsoft has already built an AI business larger than some of their biggest franchises.
So some people think they're spending too much, and other people think they're building an empire.
Exactly. It's a bet on the future, and markets are nervous bets right now.
Okay, so that's Microsoft. What happened with Meta?
Meta reported earnings the same day. Revenue was $47.5 billion, up 22%. Advertising revenue surged 24%. And then Mark Zuckerberg announced he's boosting capital expenditure by 73% to $65 billion for 2026. That's even more aggressive spending than Microsoft.
And their stock went up?
10%, added over $175 billion to Meta's market value in a single day. At least 15 brokerages raised their price targets.
So Microsoft spends big on AI and crashes. Meta spends even bigger on AI and soars. What's the difference?
A few things. First, Meta is already showing returns. They're using AI to drive engagement on Facebook, Instagram, Threads, and WhatsApp. That's powering those ad revenue numbers. The money going in is clearly generating money coming out. With Microsoft, the return is more theoretical. Ik kan monster IVF, wama surigan ozen faidie, of feind sears to mosen trades. Joutai under IFI, farid future enterprise contracts, future Azure growth, future Copilot adoption.
So Meta has proof. Microsoft has a promise.
That's a fair way to put it. Second, Zuckerberg said something that investors loved. He called this a big year for delivering personal superintelligence. The vision is AI that's deeply personalized to each of Meta's 3.5 billion users. It's a clear, consumer-facing product story.
Personal superintelligence. What does that actually mean?
He didn't get too specific, but the idea is AI assistants that know you, your preferences, your history, your context, and can do far more than answer questions. Think an AI that anticipates what you need, handles complex tasks, and gets smarter the more you use it. Whether Meta can actually deliver that is another question, but the pitch resonated with Wall Street.
So is Microsoft in trouble?
I wouldn't go that far. They're still one of the most valuable companies in the world. The OpenAI partnership is printing money. Azure is still growing, just not as fast as some hoped. The real question is whether this is a temporary speed bump or a sign that the AI spending boom is getting ahead of actual demand.
And what do the bulls say?
They say the infrastructure has to come first. You can't capture AI demand without the data centers to run it. Microsoft is making a long-term bet, and short-term traders punishing them for it doesn't change the fundamentals. The $625 billion backlog is real. The OpenAI gains are real. The question is just timing.
What's the takeaway here?
2 things. 1. The AI boom isn't a monolith. Different companies are at different stages. Meta is showing consumer-facing results now. Microsoft is building for enterprise adoption that's still ramping up. 2. Wall Street is getting pickier. The days of anything AI goes up are over. Now investors want to see returns, not just spending. DeepSeek made everyone nervous about whether all these billions are necessary. Microsoft took the hit. Meta dodged it. For now.
Same story, opposite outcomes. Wild.
That's the market. Same inputs, different narratives.
Thanks for breaking that down. If you found this useful, subscribe so you don't miss what's next.
We'll see you soon. This is Zeitgeist.